Welcome to the web-based training on taxes and financial implications. At the end of this course, you will be able to understand income tax brackets for your homestay in India, discuss GST applicability and registration for your homestay, describe the filing deadlines, and explain the importance of consulting a tax advisor. Homestay taxes. Understanding the money matters. Running a homestay is like having your own little hotel. You get to meet interesting people, share your culture, and earn an income. But just like any business, there's a business side of things to consider, and that includes taxes. This might seem a little complicated, but don't worry. We'll break it down in simple terms. This course consists of 4 modules. Let's get started with the first module. Understanding income tax brackets for your homestay in India. To begin with the first module, we will learn about income tax brackets for homestays in India. Understanding the tax and financial implications of operating a homestay is essential for owners to manage their finances effectively, comply with legal requirements, and maximize profitability. Seeking professional advice from accountants or financial advisors can provide valuable guidance tailored to your specific situation. Running a homestay is a fantastic way to connect with people and earn extra income. But like any business, understanding how taxes work is important. Here's a simplified explanation of income tax brackets for your homestay earnings in India. Income tax. Imagine a system where everyone earning money contributes a portion to the government. This contribution is called income tax. The amount you pay depends on how much you earn. Tax brackets. These are like categories based on income. The higher you earn, the higher the tax bracket you might fall into, and therefore the higher the percentage of tax you may need to pay. Understanding your bracket. Research the income tax brackets in India to see which one applies to your total income, including the money you earned from your homestay. Here's a breakdown of the current income tax brackets in India as of March 2024. Let's understand how this applies to your homestay. Identify your total income. This includes your income from all sources, including your regular job, if any, and your homestay earnings. Find your bracket. Once you know your total income, see which range mentioned in the table it falls under. This determines your tax bracket. And apply the tax rate. The percentage mentioned in your corresponding bracket is the tax rate you generally need to pay on that portion of your income exceeding the lower limit of the bracket. To understand the tax buckets, consulting a chartered accountant (CA) or tax advisor is highly recommended. They can help you understand your tax obligations, calculate your taxes accurately, and ensure you comply with regulations. Remember, taxes are an essential part of running your homestay business. By understanding the basics and seeking professional guidance, you can ensure your finances are in order and avoid any tax-related issues. Running a successful homestay involves understanding not just hospitality, but also the world of taxes. One tax you might encounter is the Goods and Services Tax, GST. Here's a simplified guide to help you understand if GST applies to your homestay and the registration process. Imagine GST as an indirect tax. Think of it like a small extra charge added to the price of most goods and services, including accommodation. But does your homestay need to worry about GST? Not always. The 20 lakh threshold. If your homestay income is below 20 lakhs annually, you generally don't need to register for GST. And crossing the threshold. If your income exceeds 20 lakhs per year, then registering for GST becomes mandatory. What if you cross the 20 lakhs mark? Crossing the 20 lakh mark for GST can have significant implications for homestay owners. If your income crosses 20 lakhs, you need to do the following. Registration. You'll need to register your homestay for GST with the government. A tax advisor can guide you through this process. And collecting and depositing GST. Once registered, you might need to collect GST on your booking charges and deposit it with the government. Here's why consulting a tax advisor is crucial. Consulting a tax advisor is crucial for homestay owners, especially when crossing the 20 lakh threshold for GST registration. A tax advisor can provide expert guidance on GST compliance, input tax credit, tax planning, legal compliance, and financial management. Expert guidance. Tax laws can be intricate, and a tax advisor can ensure you understand your GST obligations and navigate the registration process smoothly. And complying with regulations. They can help you comply with GST rules and avoid any penalties for non-compliance. Remember that this is a simplified explanation, and consulting a qualified tax advisor is essential for obtaining accurate information and ensuring you meet your GST obligations. And record keeping. Maintaining proper records of your income and expenses is crucial for accurate tax filing, including both income tax and GST if applicable. Following are some additional tips. The following government websites provide information on GST. You can also find registered tax advisors through professional associations or online directories. By understanding the basics of GST and seeking professional guidance, you can ensure your homestay business operates smoothly and adheres to all the tax regulations. The third module discusses about filing deadlines. Running a successful homestay involves keeping your guests happy and your finances in order. One crucial aspect of financial management is meeting tax deadlines. Homestay owners should ensure they are aware of the relevant tax filing deadlines and comply with them to avoid penalties and legal issues. Here's a simplified overview of important deadlines to remember in India. Imagine these deadlines as buses you need to catch to avoid any tax troubles. Income tax return filing. General deadline. For most individuals, the deadline to file income tax returns for the financial year is July 31st of the following assessment year. For example, for the financial year 2023 to 2024, the deadline is July 31st, 2024. And revised return. If you need to make changes to your filed return, you can file a revised return by December 31st of the assessment year. For homestay owners in India registered under the Goods and Services Tax (GST), filing GST returns is a crucial aspect of compliance with tax regulations. The GST return filing process will depend on the following. Monthly returns. If your homestay income exceeds 20 lakhs per year and you're registered under GST, you might need to file monthly GST returns. And quarterly returns. In some cases, quarterly return filing might be an option. Following are the important reminders for taxpayers. Double check the deadlines. These deadlines can change, so it's crucial to verify the latest information from official sources like the Income Tax Department website or the GST website. Penalties for late filing. Missing deadlines can attract penalties. And consult a tax advisor. They can help you determine the exact deadlines applicable to your situation and ensure your returns are filed accurately and on time. The following are some resources that can help you with filing tax. Income Tax Department website, GST website, Tax Information Helpline. You can call the Income Tax Department's helpline for general inquiries. By staying informed and meeting deadlines, you can ensure your homestay business operates smoothly and avoids any complications related to income tax and GST, if applicable. Furthermore, in the fourth module, we will understand the importance of consulting a tax advisor. Consulting a tax advisor provides homeowners, including those operating homestay businesses, with professional guidance, tax optimization strategies, and peace of mind, enabling them to navigate complex tax matters effectively and make informed financial decisions. Why a tax advisor is essential for your homestay? Understand the nuances. Tax laws are intricate and ever evolving, An advisor can decipher the complexities and ensure you comply with all regulations specific to your homestay income. GST applicability and registration. Figuring out if GST applies to your homestay and navigating the registration process can be daunting. A tax advisor can simplify this process and ensure you meet your GST obligations accurately. Income tax brackets and calculations. Determining your tax bracket and calculating your tax liability can involve various factors. A tax advisor can ensure you're placed in the correct bracket and your taxes are calculated precisely. Maximizing deductions and credits. There might be tax deductions and exemptions available for homestay related expenses that you might not be aware of. A tax advisor can help you identify these and potentially lower your tax bill. Staying informed. Tax rules and regulations are subject to change. A tax advisor stays updated on the latest developments and informs you of any relevant changes that might impact your homestay business. And consider this: while the internet offers some general tax information, it cannot replace the personalized guidance and expertise of a qualified professional. Here's a real-life example. Imagine trying to navigate a busy marketplace without a map or any knowledge of the layout. You might waste time wandering around, potentially missing important shops or even getting lost. Similarly, venturing into the tax world without a tax advisor can lead to missed deductions, miscalculations, and potential penalties. Investing in a tax advisor is not just an expense, but a strategic investment in your homestay's financial well-being. Investing in a tax advisor is an investment in your homestay's financial well-being. They can help too. Save your time and effort. They handle the complexities, freeing you to focus on running your business. Prevent costly mistakes. Their expertise can help you avoid errors that could result in penalties or interest charges. And provide peace of mind. Knowing you have a professional ensuring your tax compliance brings peace of mind and allows you to focus on growing your business. Remember, consulting a tax advisor is not just about filing your tax returns. It's about safeguarding your financial interests and ensuring your homestay operates smoothly within the legal framework. Don't hesitate to seek professional guidance. It's a small investment that can yield significant benefits in the long run. Thank you for watching this chapter. Let's meet in the next one.